Welcome back. Futures are indicating a lower opening this morning ahead of a big week of inflation data. The Dow Industrials right now down 64. The Nasdaq is down 39. The S&P lower by 8.5. Yields are on the rise this morning as well. Take a look at the 2-year now at up 0.8 of a basis points at 5.037%. That's one of the issues for this market. We are, of course, waiting on the August inflation data out this morning. The Consumer Price Index is out in about 2 hours' time, 8:30 a.m. Eastern. Stay with us. We've got all hands on deck as economists expect month-over-month prices to be up 0.6%. Year-over-year prices to be up 3.6%. Joining me right now is Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, great to see you. Give us your expectations and how important is the move in oil that we've been seeing, $90 a barrel now, in terms of keeping inflation elevated?
The Fed is going to be looking at the core month-over-month change in CPI, and they are praying that that will be what they expect it to be, which is about a 0.2% increase, Maria. So the core does eliminate the volatility of oil prices, and I think they will take that in stride. However, if this core month-over-month does not come in at 0.2% ratio or measurement, then they're going to be very, very concerned, and it might impact their narrative for the upcoming meeting next week.
Yeah, I mean, Adam Johnson, jump in here because oil prices is obviously an issue, but I also find income story troublesome. I mean, U.S. household incomes are down for a third year in a row, $74,580 in 2022, largely because of surging inflation.
You know, it's amazing to think, Maria, that Social Security cost of adjustments went up 8%. So the government actually gave everyone who receives a Social Security check 8% more. That's a lot of money. And that still didn't even cover the costs, which is what we're talking about. From my perspective as an investor, I would argue that inflation is coming down. It is going the right way, which is why stocks have rallied. But the problem is the fact that it is going down and will get to where it wants to go doesn't help people at home today.
Yeah, Peter, what do you think? There's an article in the Journal this morning. The title is "What to Watch in the CPI Report. Did Inflation Continue to Cool in August?" Basically saying, look past the month of August and look to the future because it is down. What's most important for us to focus on this morning with this CPI number?
Well, I think you're hitting it on the head with the consumer and whether or not they feel like they're getting richer or poorer. But the one thing I'd add, Maria, is I don't think I've ever met any consumer that measures their actual wealth on an inflation-adjusted basis. No consumer I know will say, wow, I've made more salary this year. However, when I net out inflation, I'm actually a little bit poorer. So consumer sentiment is extremely important in driving this market forward. And thank goodness it is, because if we all were looking at just the hard economic numbers, I think the consumer would behave very different from the way they are now. In contrast, say, to the industrial outlook, which is more pessimistic than the consumer right now.
Yeah, I want to get your take on this piece. I know the team covered this yesterday on the show, but Krisha, weigh in here because Jamie Dimon, the CEO of JP Morgan Chase, spoke at a investor conference this week on Monday. He spoke at the Barclays financial conference, and he said Americans are making a huge mistake, his words not mine, to believe the certain booming economy narrative. He says it's a narrative.
I do believe it's a narrative because we were just talking about consumers and consumer sentiment. Americans are feeling this in terms of 2/3 cannot put food on their table. They're living paycheck to paycheck. It is causing pain. They're defaulting on their debt, and overall consumer spending, I mean, it's trending downward on what they're spending. They're maybe spending on experiences like the Taylor Swift concert, but day-to-day items, they're not, expending money on that. Yeah. So I think it's very, very problematic. And yes, Bidenomics is a failed policy.
Well, Peter, it has to do with oil, but Jamie Dimon talked about the impact of the Ukraine war, monetary tightening by the Federal Reserve, increasing reliance on government spending. Let's not forget, we get the CPI number this morning. It's just a week before the Fed next meets, we're expecting the Fed to pause, but does that change with oil prices jumping to 10-month highs? Oil at $90 a barrel, OPEC extending production cuts and sticking to its forecast forecast for robust growth in global oil demand for 2024. The U.S. Energy Information Administration projected that the global oil market will tighten by the end of the year, even as crude production rises and demand softens, Peter. But it doesn't look like demand is softening, even as the Biden administration pushes through this climate change agenda.
I think he's walking a very hard tightrope between the narrative that you were just mentioning about the consumer and the nature of being poor in this country versus higher oil prices. So if you're the Fed, you're trying to balance these two things. Do I continue to hike rates, which puts more pressure on the consumer, but might address the oil price issue? Or do I just let this ride for now? So, the other thing I wanted to add, Maria, is nobody came down from heaven and said that a 2% inflation rate is the God-given rate that we should be targeting. And I think the Fed has kind of put himself into a corner by always repeating that. Remember, this thing came out of New Zealand in the 1980s, and we adopted it. So when Volcker was chairman, he left at a 4% inflation rate and declared victory. So it's too bad that we've anchored on 2%, because I think if we were living with a 3 or 4% narrative, things might be very different.
All right, so the Fed's two-day meeting is next week. How do you want to allocate capital? Real quick, we got to jump, but do you want to buy stocks here going into year-end?
I'm always buying stocks into year-end. I think year-end will be tremendous because I do think the Fed is going to stop raising rates, and that will invoke a tremendous rally, especially in growth equities.
All right, we'll leave it there. Peter, good to see you. Thanks so much. Peter Andersen. Quick break.